Welcome to Java and thank you kindly for joining me. It's October 17th, 2025. It is Friday heading into the weekend. We've got a massive amount to cover today, starting with what's driving this market, going through the credit jitters. We'll talk about that, seeking safety status, and what has kind of pushed all of this and where we're headed. So we've got the US regional bank stocks we'll be talking about. Let's get into what's driving this market in the first place. We've got a fear greed meter has hit extreme fear territory. So we've got a lot of very ominous indicators, if you will, in charts across the board. There is quite a bit of sell off yesterday. Weakness in these markets looks like it's continuing today. So, as we expected yesterday, it would go to volatile and then also to weakness did head in a little bit earlier than I thought, and a lot of it driven indeed on the headlines that we also spoke about. So at 23 right now, an extreme fear territory. Now pushing it a little further, this is when we start looking at possibly accumulating. Now we're going to look at the charts at this moment. This is not financial advice, but I do believe there is a little bit more to go, but we're going to be watching what happens. In particular, 10-year yield now below 4%, solidly 3.96. This is a safety status play by the larger money rushing into bonds. And then also we'll talk about the cash sector because diverging from this relative strength of the dollar also weakening. So with this, we've got cryptocurrencies also down. I would say this is a good amount, not a significant amount. We are watching the 100,000 level for Bitcoin. Actually, it's about 102 and below that 98. But if it breaks both of those, then it could go down farther and all of the others will follow in suit. So, stock market yesterday closed down. We'll talk about why. Volatility up significantly. We've got gold hitting another record high. For the futures, looks like it's still going to be weak today. And that's not a surprise. So, heading into the weekend, in particular with all of the geopolitical issues going on, it should remain weak unless there's something positive that would come out to give these a bolster. For instance, if Jerome Powell came out and said he's going to cut interest rates at 3/4 of a point, give everybody free money, that would be a boost. So, well, to everything except the relative strength of the dollar, that is. So we've got silver, gold doing very well despite a bit of a pullback in silver. Gold is hit record highs and also is at a severe shock uprising. So we'll talk about that a little bit more. I believe there is a bit of a pullback. How much, we don't know, and we'll talk about why. So the daily driver is banks. The fear gauge is the highest level it's been since April. So investors kind of finally taking a step back, not just retailers, but also big money. We've got Trump announcing a plan to meet Putin in Budapest. So if they start discussing the Ukraine war and that kind of calms things down, that could also be a factor that could kind of boost the stock markets because it's not just the United States stock market. Now, oil still weaker. We're at 56.84. Spoke about this yesterday. They're expecting a supply glut, but on top of that, this is purposefully being manipulated down. So after the speech with time speaking with Putin, that might change. But as of right now, it's on a supply glut and then also lack of demand. So as I said, this is not just the United States. We've got European stocks also slumping on what has happened. Now, in contrast with the United States, they are getting their CPIs. We'll see what their core inflation says, although their inflation is completely separate from the United States because we've got large numbers that make that difference. Now, we have this trade war, which is the silent war going on in the background between United States and China mainly, but also others. We've got Beijing vowing to fight to the end in this trade war. If you're not aware, there was recently announced, Trump announced additional 100% tariffs on a lot of Chinese goods. Part of that got walked back, but there is an issue between the rare earth metals, magnetics, clamping down on all of the corporations, not just exporting, but also manufacturing these. And then also China stopped purchasing soybeans from the United States, leaving the farmers there in quite a bit of a lurch. So the calendar. We got a calendar full of stuff you're not going to get, all kinds of reports that because of the 17th day of the government shutdown are not coming out. So we've got a lot of not just the markets, but also individual prices being very directly controlled by the United States government. We have Eli Lilly, and Novo Nordisk down sharply yesterday as Trump dictated the prices, saying that they should be just barely over 10% of what they currently are. So if he dictates prices, how can this go forward with open business practice? Um, this is not how businesses are supposed to work in a free market at all. It is supposed to be dictated by demand, supply and demand. If you do indeed have a free market, which we do not, there is no market. It is all controlled right now. If you are not aware of this, please start looking into this. The manipulations are insane. And there is no, like I said, there's no free market where the buyer and seller come to a meeting of the terms. It's all being dictated now. We've got no one wants cash right now. This is another headline saying confidence in fiat currencies is dropping. Now, as this collapses, institutional cash allocation is the lowest in 12 years. This is institutional cash. This is the big money, but the forced money portion. So the ones that have to invest, like 401ks that are dictated of what they are allowed to invest in. Now you've got private money. For instance, Warren Buffett, who is piling into, has stockpiles of cash ready for the buy. Now here's prime example. F5. If you're not familiar with this company, this is literally one of the major backbones of the internet for the United States as well as globally. So F5 stock dropping 12% as a report linked a major breach to state-based hackers in China. So there are, in short, very similar, all of the backbone. As I said, for internet, it's not going away anytime soon. So the fact that they're coming down a significant amount is what you want to look for opportunities. Look to your technical analysis for the levels so that you know before they reach those levels where you're willing to buy. Now we've got the banking stocks tumbling as US credit worries jolt investors. This is after Zions Bank as well as Western Alliance started showing that they've got a little bit more on their books than they ought to have had, and a few other issues related to fraud. So this is kind of reminiscent of the SVB collapse. So more issues with this, and this kind of shocked the market yesterday, was the catalyst for what we're seeing, but what we are not shocked by ourselves because it was kind of setting itself up for that. Now we've got AARP. This is the Association of Retired Persons. So a large contingent of the retired population for the United States sounding the alarm. Now, artificial intelligence boom threatening to bankrupt older Americans. And what they're talking about is the severe increase in electricity costs. So there is going to be a sharp need for power globally. I've spoken about this before. It's not going to stop, but what's going to happen is exactly here. They are pushing out massive increase in utilities across the nation, but in particular in these areas where the data centers are being built, driven, and forward. So if you are retired, this is one of the push outs. And I'll talk a little bit more about this sector of the population because they are a large number, call them baby boomers, that will have an effect on the economy. Now we've got a very weak economy, and it's been largely ignored. But what they're going to look at next is unemployment. We've got the East Coast shutting down two more packaging plants and $100 billion worth of supply chain collapse accelerating. So this is significant on two fronts. The first, packaging, shipping, and carton are harbingers, and they look forward as far as the economy, because these are one of the things that go first, as opposed to lagging factors, which are actually like the unemployment. Once there is higher unemployment, the damage has already happened. So this is foretelling what is coming as far as economy very, very weak. So carton down, package place shutting. This is going to have some reverberations. It's two plants in the East Coast. So uh, one in the southeast and then one up in Allentown, I believe. So going to affect those places distinctly. Now, aside from the energy costs, we've also got water. Costs of water will go up, as well as they've got some polluting factors that I've spoken about previously. But drinking water advice issued to 500,000 Americans over a funny smell. But also, there will be more warnings as these chemicals, the cooling, and all of the problems forward start expanding. So, your water, if you don't have water filters or something in place, start looking at it now before they skyrocket in price. We've got precious metals. I did want to mention this. Now, the gold market cap, $30 trillion. This is now exceeding Bitcoin as well as Mag 7 tech giants. Gold is the winner of this year. Now, that being said, it's at a marked high. It is kind of looking like normally when this happens, there is a bit of a pullback. Does it have to? No, because we've got unprecedented printing, spending, inflation coming into play. But it does look more, it's much more probable that it will be pulling back. So be careful about getting in at this point in time, or make sure your dollar cost averaging not all of it in all at once. Now, if you want to see the official spot coin price for precious metals, but gold in particular, is Kitco. So kitco.com is a spot market, and they not only give you the spot market price, this is gold in particular, but it also, if you look up here, it does say whether it's gone down due to selling or whether it's actual price action or deflation of the currency, fiat currency. And then over here, you can compare the gold price in different currencies so you can see the difference. So, with that, just wanted to open that resource to you. Macro. Where is this all leading? Well, look to Indonesia, another one. They're announcing a cash handout and an internship program to stimulate their economy because they're in dire straits. So we're watching these other smaller countries for a little bit of a lead in of what we're in for. Now, Grant, I do believe the US dollar will be one of the last to fall. It is still the reserve currency, and there isn't something to replace it at this moment in time. But eventually, we will be seeing these things. So we've got BlackRock doubling down on stablecoins with a new strategy. We know they're uh, one of the major architects of what is going forward with the digital currency tying to the digital ID. Stablecoins are CBDCs. They do own a massive amount of Bitcoin, which they don't plan on giving out. Instead, they will issue these stable coins that they can control the amount that is out. We've got another one. We can look to Japan, top banks to jointly issue stable coins. So this is all coming into play. However, what might surprise you is that Russia came in first for cryptocurrency transactions in Europe, over 370 billion. So they did surpass the UK and Germany. So if you think Russia is going to be left out of this, they're definitely not. Now, this was a disturbing headline, at least to me, saying most Americans falling behind in savings for retirement. And here's how they could make up the difference. Now, we've known they're falling apart. We've got the Lower 60% of the American population own debt. The middle class own some uh, assets and a little bit of savings in their retirement, and the top 10%, if you will, are the ones that own the bulk of the assets. So Americans falling behind. What their recommendations are work longer, think about selling your house or taking a loan against it, or some other nonsense about things that are just, I don't think the financial advice really makes sense. Instead, what you want to do is you want to grow your assets, trade into things that are going to continue to have value, as opposed to staying in cash with your savings or getting high interest loans. Get out of your debt. Now, a little bit of a switch, because this is the other side of where this is heading, and it is the digital ID. US passports no longer in the world's top 10 as far as traveling. Now, this is because visa free access. We've got in the United States, multiple countries are beginning to require visas or deny access, including China and Brazil. A lot of this over the trade issues, but it doesn't matter, they're locking them down. We've got US flight cancellations arising as government shutdown entering the third week. This is because they control TSA. They control your ability for mobility, if you will say. So now they're implementing biometric e-gates. How do these work? Through Clear. Of course, they have to do face scans along with your documentation, as well as other biometrics. Now, they are eliminating the human factor out of this, and I believe they're going to use this shutdown as a good base case to require all of these biometric entries. And for the last thing I want to leave you out to the weekend is that if you do want to go traveling and you can get there, Italian super volcano, Flegrei, is showing signs it's ready to erupt. If you want to see something erupting, although this one isn't as safe, who knows? You might be interested in a little bit of danger there. So with all of this, wish you a wonderful weekend, and until I see you again, resist.